Good morning, everybody, and thank you for coming. The purpose of this briefing is to provide New Zealanders with our latest assessment of what the United States' new tariff regime and the global response to it means for the New Zealand economy. I am receiving ongoing updates from Treasury advisors about this unfolding situation. I'm sharing an update with you today to highlight that while there are risks to our economy, there are also reasons to feel confident that we have the right settings and policies in place to get through this period of uncertainty. The Prime Minister and Trade Minister have already spoken with you about the direct effect new US tariffs will have on our exporters. Though unwelcome, these impacts are likely to be modest in comparison with the impact for many other countries. New Zealand exported $9.2 billion to the US in the last 12 months, which represents 13% of New Zealand's total goods exports. Given our tariffs are similar or lower than those faced by other countries, New Zealand exporters should remain competitive overall. It's important to also note that our efforts across successive governments to secure high-quality free trade deals provide us with some insulation against what is occurring. In addition to long-standing trade agreements with countries such as Australia and China, we are part of the CPTPP and the RCEP. We have negotiated agreements in recent years with the UK, the EU, and more recently the UAE and the GCC, and we are obviously in discussions with India. The Prime Minister and Trade Minister will continue to update you on sector-specific impacts and an ongoing update on our campaign to get the best deal possible for New Zealand exporters, both in the US and around the world. The tariffs applied by the US are the catalyst for what is occurring on global markets as the global economy faces a significant period of uncertainty. Markets hate uncertainty, and what you are seeing is volatility as investors figure out what this all means. Many New Zealanders will already have seen that in their KiwiSaver balance, which may have been knocked around, and others might be choosing not to look at it. These times of uncertainty are unsettling, but it is important to remember that KiwiSaver is a long-term investment. Today, I'm going to update you specifically on the advice I'm receiving about the potential economic effects for New Zealand from what is happening globally. The most significant impact for New Zealand will be through disruptions to the global economy. New Zealand is strong and resilient, but ours is a small, globally connected economy. When big international events happen, they affect us too. It is clear we are witnessing a historically significant global economic event. And although there remains a high degree of uncertainty about what will happen in coming weeks and months, including in the Asia-Pacific region, there are some things we do know. The Asian region, including Australia, accounts for 70% of New Zealand's international trade. There is a risk of slower growth in the region because many economies there have significant exposures to the new US tariff regime. They are facing both high tariffs and export large volumes of goods to the US. Should retaliatory tariffs be imposed and the situation escalate, there will be further impacts on growth in these countries and potentially, therefore, demand for New Zealand's products. We could also anticipate trade diversion effects. This could see a shift in exports to non-US markets where our exporters compete. The ultimate effects of all of this, of course, remain uncertain. In some cases, it is possible this will provide New Zealand exporters with a comparative advantage. It could also lead to falling prices for some of the products we import. There could also be impacts on supply chains, although again how this plays out is still uncertain. All of these factors create risk for the New Zealand economy, and this happens just as we have been gathering positive momentum and recovering from a period of high inflation and high interest rates. Confidence has been sitting higher, job growth has been occurring, and dwelling consents have been gradually picking up. Put simply, the past week's global developments make our recovery harder. These factors will also impact the government books, with potential impacts for revenue, debt, inflation and interest rates. However, there are also some positives that will help to buffer New Zealand from the worst impacts of the global upheaval. The New Zealand economy is resilient. We have a floating exchange rate that has depreciated against the US dollar. This, in combination with recent strength in our key export commodity prices, has and will continue to support our exporters. In addition, oil prices, a key import for the New Zealand economy, have fallen following the US tariff announcements. This will help to offset the impact of a lower New Zealand dollar, which generally increases the price of imported goods. I'll now provide you some detail on Treasury's latest analysis and its implications for New Zealand's economic outlook. Treasury usually bases its forecasts for world growth and inflation on what is called consensus forecasts. At the half-year update, trading partner growth was forecast to be modest at around 2.5% in the June 2026 year. Following the recent tariff announcements, Treasury's initial assessment is that partner growth will fall and will be closer to 2% in the 2026 year. Similarly, at the half-year update, global inflation was forecast at around 2.5% in the June 26 year. Treasury's current assessment is that global inflation could rise by as much as 0.5% in the June 26 year. Treasury is currently finalising its forecasts for Budget 2025, and these impacts outlined above will filter through to their assessment of growth and investment projections for the New Zealand economy. Slowing global demand is likely to reduce demand for exports and lower business investment. Higher world prices for our imports compared to export prices will reduce the terms of trade, which in turn affects profitability. Treasury expects that financial markets will keep fluctuating. However, for forecast purposes, it has factored in assumptions for what this could mean for New Zealand's debt servicing costs. As noted earlier, in recent days, the New Zealand secondary bond market has shown volatile trading. However, I want to reassure you, we have seen strong demand for New Zealand government bonds so far in 2025, with strong investor demand at syndications and significantly higher than average tender bids to cover weekly tenders. We are also ahead of the run rate required to complete this year's bond issuance program. This puts us on a solid footing to face into the current market volatility. It is too soon to say what this means for your mortgage. However, the Reserve Bank will provide an official cash rate update tomorrow. These are the updates I can share with you today. They are important because they are what will inform the economic and fiscal forecasts we present at the budget in May. At that point, we will also provide analysis of potential downside and upside scenarios. The overall impact on the government books will be communicated in full at that time. It is the government's intention to stick to our fiscal strategy, seeking to return the books to an Obergalex surplus in the 27-28 year and continuing our efforts to reduce net debt. We do not intend to exceed the operating allowances forecast at the half-year update. I need to emphasise that in an uncertain global environment, forecasting can only ever represent our advisors' best analysis at a point in time, and the points in time are shifting quickly. The government cannot control global developments, but we can control how we respond, and our goal is to steer our economy through these choppy waters in a way that limits the damage for New Zealanders. We will continue to provide responsible economic management that supports job creation, rising incomes, and a more affordable cost of living for New Zealanders. So let me assure you, despite wider global economic uncertainty, New Zealand remains well placed. Investors and businesses will continue to have confidence in us. In an unstable world, we are a safe haven with a stable macroeconomic environment, a pro-growth government, and a constellation of positive global relationships. We have access to a diverse range of markets through our extensive and growing network of free trade agreements. Some of our largest exports to the US, like dairy, meat and fruit, are among the most widely traded commodities worldwide. We've already created the conditions for growth with lower inflation, lower interest rates and good fiscal management. And through our Going for Growth plan, we are advancing economic reforms to make this, New Zealand, an even better place to invest, do business, employ people and trade from. This is not a time to dramatically change direction. It is a time to stay the course. The world is changing. The government's focus on lifting the performance of the economy has not. We are aware, we are prepared, we've got this. I'll now take your questions.
You've said that this will make the recovery harder, but that we're not going to change direction. So what is the government's plan?
Our plan is to continue our efforts to manage our books responsibly, to ensure that we are growing the economy so that we're creating the conditions in which businesses want to invest, create more jobs and are able to lift incomes. Our plan to do that has always come back to reducing the red tape, replacing the Resource Management Act, ensuring we have good education settings, advancing international investment and trade, ensuring we are developing infrastructure and delivering it well. All of those factors are as important as they ever were. New Zealand can still seek to have comparative advantage. This can be a country that looks like a better place to do business than some other countries in the world right now.
What's different though from this though to other financial downturns is that this is very much intentionally inflicted by a country. It's a series of deliberate decisions. So what's your message to the United States?
Well, obviously we would prefer not to have these tariffs, and New Zealand continues to be a country that stands for the values of free trade. We believe that the world economy is better when trade flows freely. However, my focus as the Finance Minister is on what I can control here at home.
You've said that you want to meet your fiscal goals still, but you've also said the forecast suggests that you might have face declining revenue. So in order to meet those fiscal goals, might you have to cut spending more than you anticipated?
I don't anticipate that. What I'd say is there are a number of variables here. So first of all, even ahead of Donald Trump's announcement, there were many factors that needed to be adjusted against the half-year update, including, you'll be aware, GDP revisions, updates and growth projections based on a number of different data points. So we factor that in. We also have to factor in our budget decisions, and our budget is a pro-growth budget. And then we have to factor in the latest effects of this global tariff situation. So there are overs and unders in there, and we will present the final GDP forecasts at the budget. As I say, we are sticking to the fiscal strategy. We have confidence we can stick to the operating allowances that we've previously communicated, and that our intention to return to surplus in 27-28 remains the right one.
Was there ever a consideration? You're saying the pro-growth impacts of what you're doing essentially net out that anti-growth implications of what the Americans are doing so that you hit your fiscal target, your surplus target?
No, that's not what I said. I said as we forecast growth, there are a number of factors we have to take into account, not just the US situation, but also our own policies here at home, other adjustments that have been made according to forecast data and other data.
I just don't see how you can get to that forecast surplus if revenue is shrinking.
Well, as I said, we haven't yet announced what the GDP growth rates are, nor have we announced the revenue impact, and so that will be announced at the budget. And my message is a clear one, which is that we believe, based on the information we have to date, that sticking to our fiscal strategy is the right thing to do. One of my reflections is the debate that we have often had in New Zealand about where our debt levels should sit. And when there are economic events of this magnitude, I think it's a good reminder that having buffers, having prudent levels of debt and being able to withstand volatility is very important. Now, New Zealand will not thank this government if we continue to accumulate excessive debt in a time of uncertainty.
Was there a obviously the Reserve Bank's giving an update on the interest rate decision tomorrow. It's just a written one. Do you think it would be helpful for the bank and the interim government to give a more fulsome briefing on the potential inflation situation, given what we've all been through the last couple of years?
Well, I'll leave the Reserve Bank to make those operational decisions for itself in terms of what information it believes the market needs. I note that this is one of their briefings that is the shorter briefing that they give, but I have confidence that they are monitoring all developments and will provide updates as required by the market.
And are you obviously taking inflation as being big thing for this government. It's been a real problem for New Zealanders. Can you give us any more detail on what advice you've received around inflation?
Yeah, look, the advice is mixed because there are a number of factors. On the one hand, we're seeing global oil prices dropping, which has a lowering effect on our internationally imported inflation. On the other hand, we may also see global inflation increases, which will affect us. There may be that some of our imports become cheaper as countries seek other markets in which to sell their goods where they can sell them without tariffs. So there are a number of different factors, and it is too soon to tell from my perspective what this means. I'll leave the Reserve Bank to make their observations, but I think the whole world is grappling with the fact that we are having actions, reactions, counter-reactions, and the dynamic effects of those is going to be challenging for economists to predict.
You've obviously said that you plan to stay the course with the fiscal strategy, but has there been any one outcome or metric or piece of information that's made you reconsider anything going into the budget, or think, well, we better give that a bit more thought than we would like?
Well, I think to some extent we had been anticipating some of the challenges that are playing out in the world, and that was why we were so clear that this would be a growth budget, because we see that it's very important that at this time New Zealand focus on creating conditions here that make us an attractive place for global investment, that make us a place where those who are seeking to trade can see it's a good place to do business, and where our own domestic economy, our own small businesses, our own manufacturers, our own farmers need to have confidence that there are the right conditions to grow. So this was always going to be a growth budget, and I'm really glad it is.
You've said that keeping...
Just further to Luke's question, I mean, is there anything that you were, and obviously you're not going to reveal what's in said budget, but is there anything that you were anticipating looking like you were going to fund, and then Trump's tariffs come in and you said, hey, may need to have a rethink or a relook at this?
Look, I'm conscious that the budget will not be finalised by Cabinet until over the next few days. So we haven't yet finalised our budget. We're always mindful of what is happening globally. We have been prudent as we've developed the budget. You've seen, for example, that we've made that commitment to the Defence Capability Plan. We think our ability to contribute to our effective security is very important, and that had already been provisioned for in the budget. My view is that the things that we are investing in the budget and prioritising remain the right things.
Just back on the Defence Capability Plan, are you able to kind of share any kind of numbers regarding how much of that money that was pledged yesterday will be coming out of the operating allowance?
We will fund the Defence Capability Plan out of our capital and operating allowances over successive budgets. That will be a budget announcement, which we will make in due course, and you will see that we're putting our money where our mouth is.
You've said that you are going to stick to the operating allowance. Was there any consideration given to changing that operating allowance?
Well, I've always said that the operating allowance is a ceiling, not a floor. So we won't exceed the operating allowance. But there is always optionality around where it sits, and as I've said, we have that target to get our books back in balance and to be reducing debt.
You said Cabinet is due to sign off the budget in the next couple of days. Given the volatility of the situation, would you look to extend that deadline at all?
Look, in a perfect world, I'd extend it right until the week before I announce it so I can keep tinkering with it and changing it. However, we have a rigorous fiscal management system with checks and balances, quality assurance, and the advice I've received from Treasury is that it's more important that we let that process flow than that we give ourselves an extra couple of weeks. So I intend to stick to our planned budget timetable in terms of Cabinet decisions and finalisation of forecasts.
I'm just thinking back to 2020 and what was happening around that budget. Is there any chance that you would sign off the budget and then have to throw it out?
I don't see that happening at this stage. My assurance to New Zealanders, as I've said in my remarks, is while this will have an impact on us, I'm confident that we have enough resilience to withstand it and that we're in a fortunate position relative to others, that we can stick to our economic and fiscal strategy.
So we're in a situation where the government wants growth, but spending needs to be constrained to keep debt down. does that mean people can expect more monetary stimulus? Like I'm talking in the next 6 months.
Well, obviously that's a matter for the Reserve Bank. They always observe our fiscal decisions in the budget, and those flow into their decisions around interest rates. And as I've said before, actually one of the reasons you need a government to be disciplined about its own spending is so that inflation stays lower, and so the Reserve Bank has the optionality to reduce interest rates further.
Given the importance of the dairy industry to the New Zealand economy, given the importance of China to the dairy industry, and given the likelihood that there's likely to be very large quantities of displaced dairy exports from other exporters around the world, how concerned are you that there could well be a reduction in the dairy payout?
Well, look, as a former trade strategist for Fonterra, you can imagine I have put my mind to these matters, and I will leave Fonterra to comment because I'm conscious that they will have the best information about what's happening in terms of dairy flows. What is interesting about the dairy market is that it is a commodity that is traded throughout the world. There are a number of markets which both export and import dairy products. I would anticipate there would be disruption to dairy flows, but how that finally sits in terms of commodity prices is yet to be seen.
But am I correct in saying you said the goal is in terms of a galax surplus by 27, 28?
That's right.
Okay, there's currently a small deficit forecast for that year of 304 million.
The language that we always use in our fiscal strategy is it is our intention, and that has remained our intention. The half-year update, it was our intention. We acknowledged that the forecast wasn't forecasting that, but we were still conducting our fiscal strategy with an intention to return to surplus.
So your hope is for a better result than IF was forecasting?
No, I'm just sticking to the same fiscal strategy as we had at the half-year update, which is an intention to return to surplus in the 27-28 year.
John Key has said that trade with China was crucial to getting New Zealand through the GFC. You might have been in his office at the time, or certainly around that period. How important do you think trade with China and the relationship with China will be now as we try and weather these, and how does that sit with the government's messaging around, I suppose, diversification or spreading risk when it comes to trade?
Well, look, China remains and will remain a very important trading partner for New Zealand, and we can be grateful that we have access to that market virtually tariff-free for a huge range of exports. Similarly, we import significantly from China, and that relationship is important to us. We are affected by what goes on in the Chinese economy. We are yet to see how the Chinese government will fully respond to the global events that are unfolding, so I think it will be too soon to judge precisely what effects it will have there. But you're right, this underscores how important our efforts to diversify our trading relationships have been, because if we've learned anything in the past few days, it's that you don't necessarily know what's coming around the corner, and having a range of countries with whom we can export, whether it's the UK, the EU, the United Arab Emirates, means that our exporters have options.
Just on John Key, just before the election, he told Stuff that on balance, Donald Trump would be better for the economy. Was he right?
I think that John Key was a great Prime Minister, but like many great people, that doesn't mean he gets everything right.
Minister, have you received any briefings from Trade or Treasury staff about possible costs of trade disruption to the New Zealand economy, and would you be able to share that rough estimate with us?
So as I say, the way that the Treasury translates that into their forecasts is first they look at what do we think growth will be in our trading partners, because that has a flow on to our exporters. Then they think about what will potential supply disruptions or changes in global trading have for global inflation, and they are factoring all of those things in. On a number of these things, it's going to be challenging for Treasury because they will have to put their economic forecasts to bed well ahead of the budget, knowing full well that events will continue to unfold, which may mean that those forecasts would be revised in due course.
Minister,
Minister,
you have a cabinet committee meeting to get to.
Okay,
Talk sometime about the potential for corporate tax relief. Do you still regard corporate tax relief as a pro-growth policy, notwithstanding the potential revenue loss?
Well, what I've always said is that I'm interested in competitive tax settings. Now, the corporate tax rate is just a headline indicator. My interest has been what are the conditions more broadly in our tax system, and how do they support, in particular, businesses to invest and to grow. And so those are the questions that I have been contemplating as we've been putting together our growth budget.
Can you rule out introducing any new taxes or revenue measures in this budget? On top of the charities tax you've obviously already talked about.
Look, I will announce the budget when I announce the budget, but our focus is very much on ensuring that the cost of living is more affordable for New Zealanders, not less.
You can't rule out new taxes on top of the charities tax.
Sorry?
You can't rule out new taxes other than the charities tax you've spoken about.
This is not a budget designed to introduce new taxes, no. We are a low tax government.
So just to be clear, it's a no in response. You will not introduce, aside from the charities tax, any new taxes or revenue measures in this budget?
It is not our intention to introduce significant tax or revenue measures in this budget.
What is significant?
I want to be clear though, as I've said previously, we may be looking at other tax changes in terms of tax relief. So that's all I'm going to say today about the budget. Otherwise, I'm going to announce the budget today and my Cabinet colleagues haven't even signed it off yet.
Your answer to Gina's question before said that the operating allowances were a ceiling, not a floor.
That's right.
Is there any chance that you actually leave some of that unspent?
Well, as I say, the budget's yet to be signed off by Cabinet, so that's a question for another day.
Would you like it to be?
Look, my commitment to New Zealanders has always been how do we make sure we get the right investments in the health system, the education system, law and order, that we're ensuring that wherever possible we're providing cost of living relief, that we're making social investments for the future. In this budget we have big calls in terms of the defence budget, providing redress for victims of abuse and state care. There are many calls on our budget. At the same time, we have been in an ongoing effort to find reprioritisations and savings because we believe that every dollar that the government uses should be scrutinised and put to its best effect.
Realistically,
what impact will the court case that the Auditor General highlighted yesterday, the $3.2 billion the extra that's needed in the veterans' payments?
Look, I'm not going to comment on that. I'll leave that for the Minister of Veteran Affairs.
Realistically, with the operating allowance that you've set yourself, do you envisage any of that being left behind with all of the commitments that you want to make in health, education, etc.?
I'm going to make this the last answer because this is turning into a pre-budget briefing, and as delighted as I will be to offer those soon, I do genuinely have a Cabinet Committee meeting to go to. But look, the point that's often missed with the operating allowance is that operating allowances are a net concept. So it's not just what's the new money we've put to one side, but it's what other money is available to us if we reprioritise spending that would otherwise have been allocated elsewhere. That approach meant that in last year's budget we delivered $23 billion of additional savings that we were able to reprioritise in order to support tax relief and a range of other government commitments. There will be the same approach in this budget. It's not just the operating allowance, it's where we're able to reprioritise funding to support things that we think are priorities for New Zealanders.